when you join the class, please put on, please mute yourself. Mute yourself so that your sound doesn't interfere with us. Thank you. Okay, so who was the guy that that asked the question yesterday? Was that Harrison? Yeah, sorry, was that Moses? Someone asked the question yesterday about him revenge trading, about him doing revenge trading, and I said I was going to address it in the class today. If the person is not here, I think we'll postpone that till maybe later in the class. Then probably we'll do that last. Okay. All right, so let's get started with our main class for today. Then we can talk about that one later. So we're going to be talking today about, we are still on our session, on our class, on our series where we're talking about trading strategies. Okay, trading strategies, and then trading strategies, day trading, and how to win. So the last class we had, in our last class, we talked about scalping. We talked about several ideas on how to scalp, right? We talked about the mindset, because right now for this segment of classes, we are focusing more on your mindset and on your plan, on your mindset and on your plan, right? People do not lose in trading. People do not lose in trading because they lack strategy most of the time. Okay, the number one reason people lose in trading is psychological, is mental, is a situation that has to do with your mind, the state of your mind, the state of your thinking, right? The state of your mind, the state of your thinking. That's the major challenge that you have in your trading, right? So that's why we are focusing this first session of classes on that. So we talked about scalping. The previous class, we talked about the general ideas on trading, day trading, swing trading, scalping, all kinds of trading, right? Now we're beginning to take them one by one. We had scalping the last time. Now we're talking about day trading. Now, in future classes, we're going to be talking about specific strategy. Okay, index money method, all of those different individual strategies, we'll talk about them, right? But for now, we're focusing on your mental state, right? On your mental state, the way you're supposed to conduct yourself with your trading, how you should respond to a trade, a winning trade, or a trade that didn't go your way, whatever. How you should create a plan, how to stick to your plan with discipline, the patience, all of those things are more important than the individual parts of a strategy. I can come here and teach you now and say, okay, this is the snake strategy, or this is the index money method, or this is the Ichimoku strategy. And I teach you, and then some people will win with it, make money with it, and other people will lose money with it. Because they don't even know, you don't even first of all know the kind of trader you are and how to use whatever strategy you are being taught. Because any strategy I teach you, any strategy you learn can be used in to achieve whatever goal that you determine. Right. So if you are a swing trader, for example, you can use a strategy that has to do with you can use any strategy, let's say an indicator strategy. You can use an indicator strategy for any kind, whether you're swing trading or you are doing day trading or you are doing scalping. You can use a strategy for different ranges of trading, right? You're doing, when I say different ranges of trading, I'm talking about day trading, swing trading, trend trading, range trading, and all of that. Right? But understanding how you personally function as a trader and understanding how you need to conduct yourself with your plan is more important than whatever individual strategy you might learn. Okay? Because I've seen people who manage to lose money no matter what you give them, no matter how good what you give them is, they still manage to lose money. So we're going to be talking so much about day trading today. And then just like in continuation of our class. So first of all, a day trader is one who opens and closes a trade within the course of a day. Okay? A day trader is a trader who opens and closes his trades within the course of a day. That's what makes, that's how you are a day trader, right? Within the course of a day, you open and you close your trade. That makes you a day trader. Now, the way that operates for you can be different. Your trade can be, your trade can run for a whole day. Okay, your trade can go and say, okay, you might determine I want to take 100 pips on a trade. You might determine I want to take 50 pips on a trade. You might determine I want to take several trades. You might say I want to take only one trade. But within, as a day trader, you enter and close your trade within a day. Now, a scalper also opens and closes a trade within a day, but a scalper is looking for moves that are like 10, 15 pips. 10, 15 pips. All right. So a scalper is a very short-term trader, very, very short term trader, right? There are some scalpers that go for 5 pips. There are some scalpers that go for 7 pips, right? That is what they deal with. That's how they do their trading. They enter and they're out, they enter, they're out, they enter, they're out. That is what a scalper does. But a day trader doesn't do that. A day trader will analyze the market, wait for his trade, enter the trade, but usually a day trader will close his trade within the course of a day. Now, within the course of a day doesn't means a course of 24 hours most of the time. It's difficult for you to find a day trader, but for you to be a day trader and your trade is running for 2 days. No, most of the time that trade is, that's not day trading. That's the reason why you have to determine first and foremost what kind of a trader you are. That's what I've been saying initially, right? We will determine first of all, what kind of a trader am I? Are you the kind of trader that wants to take quick profits? Am I the kind of trader that wants to take quick profits? I want a kind of trader that I want to withdraw money very quickly, or I want to just see profits and grab it? Or am I the kind of trader that I'm not content with small profit? I'm not content with 30 pips. I'm not content with 50 pips. I want 150 pips. I want 200 pips, right? So that's what you have to determine first. When you know the kind of trader you are, then that's when you start to even determine which part of this trading should I even, which part of this, what kind of a trader am I, and what strategy should I be using? Should I be a scalper? Am I a scalper naturally? Am I a day trader naturally? Am I a position trader naturally? Am I a swing trader naturally? Right? You find some people who say, oh, swing trading is the best way of trading. Swing trading is the best way to trade. Some will say, oh, I'm a scalper. There is no best way to trade. There is absolutely no best way to trade. It's just like someone says, this is the best clothes to wear. There is no best cloth to wear. This is the best food to eat. Is there a best food to eat? There's no best food to eat. It depends on what I like to eat. It's different from what you like to eat. It doesn't mean that because I like something, you don't like it, I'm therefore better than you, or something is wrong with you, or something is wrong with me. That's the way trading is. There is no best way to trade. The most important thing is, how are you profitable? Are you making money? Are you profitable? That is what's important. So when you determine the kind of trader you are and you adapt your trading to your personality, then you become profitable. And that's what we are talking. That's what we are talking about. Profit is what matters. So if you're a scalper and you take 5 pips consistently and you're profitable, and then there's this guy who says, oh, I want 150 pips, and then he is not profitable, then as a scalper that's taking 5 pips, you are the one that is scaling the market. You're the one that is making money. You are the one that is a trader, not the one who is chasing what he's not able to get, or he doesn't have the personality to get, right? So as a day trader, you open your trade. Typically, you open and close your trade within the course of a 24-hour day. Within the course of a 24-hour day, you open and close your trade. So what that means is that as a day trader, number one, you have to first of all understand what a day trader understand that being a day trader doesn't make you doesn't mean that every day is a trading day. So that we say you are a day trader doesn't mean that you will get your kind of setups every day. Usually when you enter the week, the week can be slow. The week can also start out fast. Usually, sometimes you might find out that there will be certain breakouts that will happen on Sunday nights. As the market opens, it breaks out and the move just continues like that. There are times for the instrument I trade, the market opens Sunday night, and by morning I'm seeing 100 and something people move already before the next morning. But there are times that move, you will not see it. You will typically not see it till up to Wednesday, Tuesday, Wednesday. You will not see that move sometimes. So what you have to understand is that people have this mindset of trading, mostly day traders, they have this mindset of daily income. So they're like, okay, I'm going to try to make 50 pips today. I'm going to try to make this amount of money today. I'm going to try to make that amount of money today, right? So, but the challenge with trying to make that amount of money or a certain amount of money every day is that you start to treat trading like it's like when you are a salesperson, right? It's like when you are a salesperson. When you are a salesperson, what you do every day is that you go and make appointments. You call up clients, you talk to clients, you talk to all kinds of people. You're trying to build relationships that will lead to a sale. But you cannot wake up in a day, let's say you sell property and say, I'm going to sell 100 million naira property today, or I'm going to sell a property that is worth $20,000, $50,000 today. There's no way you determine that. What you will determine, the only thing you can determine is your showing up. You come into the market, you talk to, as a salesman now, you talk to your prospects, you do the work you are supposed to do that's leading you one day at a time towards that sale that you're targeting. And then when that sale happens, it can be very big. And it can be a sale that covers the target that you will have for 2 months or 3 months. And you can make a sale that covers your target for a whole year. You see, so that's the way you want to look at trading. You don't want to look at trading as every day you calculate and you say, okay, every day I'm going to make, I'm sure you guys have seen those kind of people before, you kind of systems, or some people talking about how you make 20 pips a day or 50 pips a day. Right? Think about it. You said, I'm going to make 50 pips a day, and you are chasing 50 pips a day. Even when the market is telling you, I'm not ready, there's no setup. For example, there's a trade that was meant to take this afternoon, and then the trade just missed my entry by just a few points. And eventually the trade has done what I expected it to do. Right now, it has done its move to the target I had, everything set in place. It just missed my entry. Now I didn't beat myself up because I know it's trading, and those kind of things happen. Those kinds of things happen. So, so when you look at that, you're going to be asking yourself, should I be setting a target and telling myself this is how much I'm going to make today or tomorrow? No. What you are looking for is this. You want to understand the kind of trader you are. You know, let's say in this case, you are a day trader. You are usually someone who wants to open and close your trade within the course of a day, right? So by the time you know that about yourself, what you want to do is that you ask yourself, what is my daily plan? What is my setup like? What am I looking to see in the market before I trade? So you determine that, and then you come to the market, you do your analysis of the market, and then you know where this is where I'm going to be buying and selling. This is where I'm going to be buying. This is where I'm going to wait for price. I'll wait for price to at this point for me to buy, or I'll wait for price at this point for me to sell, right? I'll wait for price at this point for me to buy, or I'll wait for price at this point for me to sell. That's what you're looking for. And then that point you have set to buy or sell, you don't have a guarantee as to when price is going to get there. Nobody should guarantee you that, oh, price is going to get there in the next 3 hours or in the next 5 hours. So how are you not going to tell yourself that I'm going to make 50 pips today, or I'm going to make 100 pips today? No. What you want to do is that there might be one day when price will do a 200 pips. Like yesterday, just within the course of 8 hours, from just early in the morning, course of 8 hours, two 4-hour candles on the particular instrument I trade, price did 200 pips. But the previous day, it was just going up and down, nothing serious happening. And then within a few hours, just from early in the morning to late in the morning, 200 pips was done, right? So that's the way you want to look at the market. You come into the market and you tell yourself, hey, I'm going to analyze the market. I'm going to look at the market. I'm going to analyze the market. I'm going to wait for price to give me what he wants to give me. If price doesn't give me what he wants to give me today, that's fine. I'll wait for it tomorrow. If he doesn't give it to me in the morning, I'll wait for it in the evening. That's the way you trade. When you do that, you take away the pressure from yourself. Most people put pressure on themselves. Oh, I need to do this amount of money. I need to do this. I need to do this. I need to hit this target. And that's why you see some people who lose money, and one of the people who say, I want to manage money. And then the person, because the other person who wants to give him the money is not a trader, that one is telling him, how much percentage can you give me in a month or in a week? Then he is calculating, okay, and you can make this amount, you can make 10% in a week or something like that, or in a month, whatever it is. There is no way you can determine. Of course, you can make 100% on your money in a day. Yes, you can make 200% on your money in a day if you are leveraging your money very heavily. But that doesn't mean you can guarantee that. You can do it today and you never do it again for the next 2 weeks. Right? You can enter a massive move today and you never enter a massive move again for the next 2 weeks. Your trade might hit take profit today, and then the next few trades, they don't hit take profit. You just have to close and take your profit, take the profit that you get. You see? So that's the number one thing you have to understand. As a day trader, it does not mean you have to trade every day. It doesn't mean you have to have a trade every day. It just means that you are prepared in the market. You come to the market prepared to be able to grab a trade when the trade is available. So that's the reason for analysis. When we say analysis, what's the purpose of analysis? The purpose of analysis is to be ready for a trade when it happens, not to force a trade to happen. The goal is not to force a trade to happen. The goal is to be ready for a trade when it happens. To be ready for a trade when it happens, not to force it to happen. Okay? That's basically what it is. Not to force it to happen, but to be ready for it when it happens. Okay, so have that in mind, because this is going to take away a lot of pressure from you. To tell yourself, oh, this is the target I have. You hear it all the time. You have people who all the time who've been in the market for a long time, who are still probably not profitable, and they tell you the same thing. They are saying, I have this target. I have this amount, this target I want to hit per day. I have this amount, this target I want to hit per week. You don't set for yourself those targets. What you do is you come into the market, you fund your account, you do your analysis. Whenever the market gives you a trade, you take. If the market doesn't give you a trade, you wait. That's how it's done. If you enter the week and it takes you up till Wednesday, for example, from Sunday night to Monday to Tuesday until Wednesday before you get one trade, get your first trade for the week, you are good. You are good. So you have to know how to understand that and live like that as a trader. Live as a trader like that, right? You live as a trader like that, because that's going to save you. That's going to help you become profitable, and it's going to save you from a lot of issues. That's number one. Okay, that's very, very key. Don't put pressure on yourself and tell yourself, this is my target for today. No, when a trade happens, when you enter into a trade, you don't know if that trade is going to do 100 pips. You can only do your analysis and say, okay, price is going to go from here to here. There is no guarantee that that move you are anticipating in the market is going to happen. No, there's none. So learn how to come into the market, take your analysis, then take your profit. Also, taking profit is very important. Okay, right? So another thing you want to know there is that your trade, you only trade when there's a setup. Yes, I've talked about that, right? So number two, develop a trading plan and stick to it. We've talked about this trading plan over and over and over again, right? Now, a trading plan basically does something very simple for you. The purpose of a trading plan is to help you to be disciplined, is to help your discipline, basically. The number one goal of a trading plan is to help your discipline. Okay? Now, how does a trading plan help your discipline? So when you have a trading plan entails your whole game plan, What am I going to do? How do I know that I have a trade? How do I know my signal for trading? How do I know? Do I have to see a breakout of resistance? Do I have to see a breakout of support? Do I need to buy at support, at sell at resistance? What does that trade look like for me? What does that trade look like for me? That's what you are targeting. What does that setup? That setup, when we say setup in the market, we are saying we are talking about your strategy, how your strategy plays into the market and gives you an opportunity. So, and a setup is an opportunity for entry. A setup is an opportunity to trade. That's what a setup is, right? So now the question is, when you see that, when you that setup, what constitute that setup for you as an individual trader, as an individual day trader? What is it that constitute that setup for you? You have to define that clearly. What does that look like for me? Do I have to buy here? Do I have to sell here? What is it? Is it a resistance I have to mark? Do I have to wait for price to get to resistance and sell? Do I have to wait for price to get to a support and buy? What exactly am I trading? There are many times you come into the market. Sometimes you come into the market and you see somebody comes into the market and he just opens his chart and he sees a green candle, he starts buying. What are you buying? What are you buying? At that point, you just see a green. I used to know someone like that. Once he sees a bullish candle, he just enters, buy. Then he wonders why he enters buy, and the thing, at the time he clicks buy, the thing starts to sell. He's wondering what's happening. It's like these people are watching me from the back. They are watching my trade. Nobody's watching your trade. Nobody. People that have good money are trading on the same platform. You are trading $200 and you see somebody is watching your trade. What are they watching your trade for? Right? So it's you that don't have a plan that you are sticking with. So a plan is so important. In fact, if you don't have a plan, now there's a time you can when you have a plan, you get to a point where you may not even really need to use a plan like that because you've already memorized it. That's why I said the number one goal for a plan is for you to have it, is to help your discipline. When you're already disciplined, you know exactly what you wait for to enter a trade. I was talking to someone the other day who was asking me a question or whether he should enter trades using a pending order or using an instant order or market order. I was like, what you have to determine is what challenge are you having? He was saying that he found out that he was entering trades too early. He will enter a trade too early. So because he was entering a trade too early, he was looking for a solution around that. Should he use pending orders or should he use market orders? I said, well, the truth is that you need to have a system. The one that you're going to use is the one that is going to work for you best. That's where your journal comes in. You have to take note of your trades and say, okay, this is what is working for me. This is what is not working for me. If this is working for me, then I stick with what's working for me. If this is not working for me, then I take my hands off what's not working for me. You see? So the only problem you can have if you decide to use pending orders rather than instant orders in the case of, in that particular state, is your fear of missing out. Like I said, that trade I entered today that would have done, I think close to 100 pips, I think about 100 pips that I missed because I had a pending order there. But for me, I didn't bother myself. I already knew those kind of things happen in trading. So I don't beat myself up over that. Yes, I would have made a lot of money, a good amount of money from it. Yes, but then I know that it happens. So I need to be able to live with that and then get ready to trade another day. It's as simple as that. You see? So that's the only thing. The only thing is, what if I had entered that trade and the trade went into drawdown first? I will still be beating myself up. Oh, I knew I shouldn't have entered this trade and all that. You see? So you have to pick one and just do what works for you. The only thing is that sometimes you might have a situation where you missed a trade. You see? So, and it happens. Once you have a system, it's going to work. It's going to happen. You might be like one pip, just one pip difference, and the thing leaves, the thing misses your entry by one pip, and it does 200 pips after that. And then you're just watching, you see, and then you don't even have another way of entering the trade because you miss the entry that would have given you the money. So you have a plan. A plan is to outline the things you do, the process you go through. Trading is a process. What is the process? How do I enter my trades? What do I do? Outline it. What strategy am I trading? How does it strategy play out? How do I know that this strategy is giving me a trade now? All of this is what you put together into a plan. Then you execute that plan over a period of time until you master the plan. It becomes a part of you, and you don't really need to look at that plan every day and say, okay, do this, do this. It's already part of you. That's the discipline that you're developing. You develop that discipline until it becomes a part of you. Just works that way. It's a part of you. You don't have to do anything about it anymore. It's now a part of you. You see that? It's now a part of you. So that's very, very important. Developing a trading plan that works for you as a day trader. What plan works for me as a day trader? And then for you to develop a plan as a day trader, you need to know what is realistic for you. What is it that I'm chasing? What is it? What targets am I having? All of that you need to understand and put within a plan. We've talked about a plan. We had a class where we talked about a plan before and all of that, right? So if you still don't know about how that is, probably I will post the trainings of that class in the group again. And in future classes, we're going to have another planning trade planning session where we'll discuss that again for new people. And then, but in the meantime, you can go through the class that we've had before. Okay. Right. So now pick a strategy and stick to it until you're profitable. So this is part of your plan. This is part of your plan, right? So how does that work? You pick a strategy and then you say, okay, this is what constitutes a strategy. Now let's say your strategy has to do with break, retest, continuation. Break, retest, continuation, right? That is a strategy. Now that strategy can be called any kind of thing, but basically what it means is this. You are going to have a resistance point. Let's say this is a resistance. This is a resistance. Then price comes like this, breaks out of it. Then once it breaks out of it like this, then it comes to this point, it retests it, then it continues like this. This is a strategy. Okay, now if this is your strategy, you have to know what you are looking for. Number one, you have to know this structure. You have to know how to mark it very well. You need to know how to mark your support and resistance very well, if that is your strategy. Or support and resistance can be done also through what is called Fibonacci retracement. So a Fibonacci retracement is also a strategy of its own that you can use to trade. Right? Is a strategy of its own and is a very effective strategy, actually, depending on the kind of trader that you are. Remember that, depending on the kind of trader you are, the Fibonacci strategy is effective. So you notice what it is that is my issue. What exactly is the strategy I want to use? You define it. You know how does this strategy form? What are the things that need to happen? In this case now, for example, you need to have a resistance in place. You need to see a breakout of that resistance. You need to see price pull back to that resistance, in which case it's called a retest. It retests that resistance before this will now be your entry point right here. This area is now your entry point. This is your entry, and the goal is to buy and move forward. So what happens is that you have this resistance in place, then you have candle breakout. Okay, you see it break out, then it retests, it does a pullback. Then you now enter at this point for a buy trade, and that buy trade, the goal now is to give you a buy that goes in that direction. That is what you're looking for. And this is what you tell yourself that this is what I'm going to do every time. Every single time I'm going to do this. Every single time I'm going to do this, right? So when you've done that, when you determine that, that's what you do. You don't deviate from it. You pick it, you stick with it, because it takes time to master a strategy. You can't say I have 5 strategies I use. Now, if you're using 5 strategies, that means you are very profitable. You've been in the market for a long time. You've spent time, because every strategy you focus on, every strategy you pick is going to give you, you're going to spend a lot of time trying to test it, perfect it, and use it the right way. Yes. That's one reason why we say stick to 1 or 2 currency pairs. You've heard me say stick to 1 or 2 currency pairs, because you need to know how each currency pair, how does it work? How does each currency pair function? You can't analyze and follow 25 different currency pairs at the same time. You can't do it. Not that you can't do it, but it's going to be very difficult. It's going to take you time. And then the truth is that you don't need to follow so many different instruments for you to be profitable, for you to make money. So why would you want to take yourself when you can just calm down, and follow only a small select number of instruments and follow them and be profitable? And then when you don't see a trade there, you leave the market and go do other things. You see? So if you decide that you're going to do that, then you are able to stick with that. You stick with that, right? So that's the first thing you want to do. You want to make sure that you know exactly how does my strategy play out? What are the different moving parts of this strategy? Then you stick with it. You play it over and over and over and over and over and over again. When you've played it over and over and over again, then you get to a point where it starts to produce results. It's producing results for you. It's producing results for you. It keeps producing results for you. It keeps producing results for you until you've mastered it and you have used it to make withdrawals. You've used it to make withdrawals. You are using it to make withdrawal. Remember, if you're not making withdrawal, you are not trading yet. If you're not making withdrawal, you are only depositing. You are not trading yet. You are not a trader yet. You are not a trader yet. When you start to trade, when you start to make withdrawal, when you start making withdrawal, that's when you are a trader. You see? So that strategy will help you. You understand it, then you start to make profitable trades, and you start withdrawing, or you start compounding your money, whatever is your plan, whatever is the plan you want to do. Depends on what you want. You see? You stick to that and become profitable with it. Then you can then decide to add another strategy to it. For me, I like to keep things very simple. I don't like to make things very hard, because what I've discovered in the forex market is that, see, you don't need 10 strategies to make a lot of money. You don't need 10 strategies to make a lot of money. You just need one good one and one or two good instruments. And then you need good capital to fund your account. That's it. You fund your account. Once you fund your account, you have a very good strategy. You pick one or two instruments, you fund your account. You are good. You will make money in forex. That's it. You don't need to have 25 different instruments. They have 10 different strategies. They color your charts green, color your charts all kinds of things, bring all kinds of things into your chart. No, you just need one good strategy that you have seen that it works. Then you need one or two good instruments that you understand very well, and you are ready to go. And then you fund your account, you are ready to make money and withdraw. That's what it is to make a career out of trading. That is what it is to make a career out of trading. Okay? So do that. Pick a strategy, stick to it. Then understand what is realistic. Number 4, understand what is a realistic trading target and set such. 1 minute, guys. Like someone is sending a message in the group. Oh, okay. Okay. So understand what is realistic, what is a realistic target, and set such. Put your emotions in check. So now, what is it that you want to achieve in the market? First of all, as a day trader, you can't enter the market. You can't enter the market and say to yourself, I want to get 200 pips from Euro USD every day. Every day I trade, I'm going to get 200 pips from Euro USD. The first, you want to ask yourself, what is the daily range for Euro USD? How much movement does Euro USD do every day that you want to make 200 pips from Euro USD every day? That's the question you want to ask. Are there days where Euro USD would do 500 pips, 300 pips, 200? Of course, there are such days. But there are days where it will just be there, ranging. In fact, ranging, for you to even get 50 pips can be very difficult. So you need to know, as a day trader, what is realistic for me. You see, that's very important, because if you are a swing trader, what is realistic for you is different from what is realistic for you as a day trader. Because as a swing trader who is willing to have his trade running for 2 weeks, he can set a target of 400 pips. A swing trader can set a target for 400 pips. It's realistic because he's a swing trader. He will allow that trade. He will wait for that trade for 2 months. And then he gets that trade and then enters that trade and stays in that trade for 2 months. That's realistic for him to say, I'm going to go for 600 pips. Very realistic for him. But if you are a day trader and you tell yourself every day, I'm going to do 200 pips, you are not doing yourself good. You're not doing yourself a favor. Especially if you're trading currencies. Now you can decide to trade Bitcoin, or you can decide to trade NASDAQ or indices, but then those ones also have their movement, their daily movement, the range of their movement. 200 pips might be very small for if you're trading NASDAQ, but then your capital is also at risk. That's the question. So if you are ready to risk your capital very much there, because the more the asset, the more the instrument moves, the more volatility it has, the more money you can make, the more money you can also lose if a trade goes against you. You see? So if that's the case, if that is the case, what is now your play? What is your play? What instruments? That's why we said again, going back, what instruments are you focusing on? Are you focusing one or two instruments that you're focusing on? Then those instruments you're focusing on, you need to know what is the rent, what can they give me in a day? And when we say a day, doesn't mean every single day, like we said before. Usually when you enter a trade, what is possible, what is likely? Can I easily get 100 pips every time I enter a trade? Can I easily get 50, 60 pips every time I enter a trade? All of those are the questions you want to ask yourself. And you only ask yourself those questions based on what is going on in the market, based on what is going on with that particular instrument. All of that is what you have studied and they are within your plan. So you know what's realistic. So you you set a goal that's realistic for you. Like I said, another goal is telling yourself, I'm going to make 50 pips every single day. I will make 50 pips and I'll quit the market every day. Then you find somebody who tells you, I make 50 pips every day. I make so and so amount of money every day. Now, 50 pips, even when you're trading currencies, 50 pips in a day is not a lot of pips. It's actually achievable. But the question is, it may not be achievable every day. But it's achievable every time you get a trade. Every time a trade plays into your strategy very well, every time a trade plays into your strategy very well, of course, that amount of money, that 50 pips or what 50 pips is not a big amount of, it's not large. It's actually a very reasonable amount of, it's actually a reasonable pip target. But then when you say to yourself, I'm going to do this every day, that's where you start to have issues because you put yourself under pressure that is not necessary now, right? So you set your goal, what is good for you, what is achievable, and say you can get a trade set up on Tuesday. Today is Tuesday. You can get a trade set up. Maybe you didn't get any trade on Monday, but you got a trade on Tuesday and the trade gives you 70 pips. Of course, you do that. Maybe on Wednesday, you get another one that gives you 100 pips. You see? So that's the way it works. And then at the end of the week, you might discover you actually did 300 pips profit. But then that is much easier than telling yourself, I'm going to go for 50 pips every day, because what that target does for you, what that target does is that it sets your mind in such a way that even when the market is telling you don't enter, you are still entering because you have set a target. You are telling yourself, I must make 50 pips today. Even when the market is telling you, sorry, I don't have a setup for you. You say, no, you must have a setup for me. I must hit my target today. No. You see? So that's why you want to know what is realistic for me. For any instrument you're trading, every time you get a trade, 50 pips is realistic for you. Depending on the instrument, 100 pips can be realistic for you. Right? Yes, if you're trading GBP USD, if you're trading gold, if you're even trading, if you're trading Euro USD, and in fact, most instruments, 100 pips is still realistic if you enter a good trade, if you get a good trade, right? If you get a good trade for a day trader, 100 pips is still realistic. But then sometimes it may not play out like that. It may not get up to that amount. But sometimes it can go well beyond that amount within just a very short period of time. You see? So know what is realistic, put your emotions aside, and determine what is realistic. And also, when you enter a trade and you are looking to buy on this trade, and then you buy on the trade, and you say to yourself, okay, I want price to move from this point to this point. You see, this point here, I bought at this point. I want price to move from here. I want price to move from here to this point, right? So, but when price moves all the way to this area now, you see, it starts to pull back. It starts to, it's not getting to that point, but you can already see that it looks as if price is reversing now. You keep holding this trade. You keep holding this trade because you have set this target. You keep holding this trade because you have set this target. What happens? You may find out you lose this entire profit. Because the market already told you that, hey, I'm reversing from here. Yes, this is the target. This is what the market looks like. This is when I look at historical pattern in the market, I think that price is going to get here. But then the market starts to tell you that, hey, price is not, I'm not going there. And then it gives you this pattern that is not going there, yet you are forcing it. You are forcing it and saying you must go there. And then the market reverses and you might end up losing your entire profit, which can be very, very painful. If you've been a trader for a while, you know that having seen good profit and then missing that profit can be very painful. It can make you even get into some revenge trading, even when you didn't lose money. There are sometimes some people, they will break even here and then remove the stop loss and let the thing just keep going. And they now lose money from something that was initially profitable. They will now lead to a huge loss on it because you did not look at what's reasonable. This trade now, what happened? When you enter a trade, that trade is not set in stone. Oh, I'm expecting 100 pips from this trade. It can get to 50 pips and decide that it's not going again. So at that point that it decides it's not going again, you are beginning to see the pattern that is not going again. You close your trade and you collect your 30 pips and you are gone. You are okay. You are better off with 30 pips than better off than negative. You are better off with 30 pips than zero. Yes. So this is the flexibility you have to put in your trading. Some people will enter a trade. Maybe there is a signal. They take the trade and just walk away and they just think it's treasury bills that they bought. Or I bought treasury bills. I don't need to look at it. I don't need to look at it until so and so. It doesn't work that way. It doesn't work that way. So there's what's called trade management involved. You have to look in. All of those things is part of setting a realistic target. You set a trade, you know that, okay, this trade, I want you to do this, but you also know that it is possible it may not do that, but you are ready. If it does that, fine. If it doesn't do that, fine. You take your profit, you are still good. You see? So all of that flexibility, in fact, this understand what's realistic is basically have a flexible perspective. Have a flexible disposition when you enter a trade. Have a flexible disposition. That's what it is. Right? If trade gives you if the market gives you exactly what you plan for, great. If it doesn't give you what you plan for, fine, you still move on. Many times when I set a trade and I set a target and I see a target and I'm like, okay, I'm expecting price to move from this point to this point. I don't like to put my take profit at that point. I like to always take less. I always like to take less than I would expect what I would have wanted to take. Where I expect price to get to, I don't want to put my take profit there. I want to put it less so that at least my price will go there, hit my take profit comfortably for me, and still keep going up. I don't want to take all the profit. I want to take some and be happy and move away. Than for me to now enter a trade and then the trade did now not even get to where the trade did now hit, it didn't hit my take profit, it now reverse from there. It doesn't make sense. You see, so all of that flexibility is what you want to do, what you want to have. So number 5 is develop the patience to wait for the right setups and parameters. Develop the setup to wait. This is good for anybody, whether you are a swing trader or you are a day trader or you are a scalper. You want to wait for the right setups to happen. You have to develop. You see the word I use there, develop the patience. Because this patience does not come with us as traders. It doesn't come with us. We just have to work on it. We have to see it. You have to go into the market and say, oh, my setup has not happened. And since my setup has not happened, I am not going to enter this trade. My setup has not happened, so I'm not going to enter this trade. You have to, it's a question of mastering it and understanding and telling yourself, oh, this is what I must not, this is what I will not do. This must happen for me to enter the trade. This must happen for me to enter this trade. If this doesn't happen, I'm not entering. If this doesn't happen, I'm not entering. You have to be able to tell yourself that. If this doesn't happen, I'm not entering. If this doesn't happen, I'm not entering. This must happen for me to enter. This must happen for me not to enter. So very, very, very key. Very, very key that you develop the patience. And the only way to develop this patience is by having a plan and sticking to it and doing it over time. Have a plan, stick to it. Over time, you develop the patience. That's just, there's no way the patience can be imparted to you. There's no way the patience can be put inside you or can be put into your mind. There's no two ways about it. The only way you can get the patience is basically by practicing. By practicing, that's the only way you're going to get the patience, by practicing. When you practice, you get the patience. But if you don't practice, you won't get the patience. All right? So these are the very, very, very important things when it comes to day trading that you need to understand. Okay, so I will pause the class now. I will ask some questions and then you record. Okay. Okay, so if you're in the class right now, the first thing you have to understand is what is your plan? What is your trading plan? What does it entail? What are you trading? That's the first thing. Are you trading? What can you define what exactly you are trading? What exactly is the strategy that you are trading? I want you to take a note and define the strategy you are trading. Sorry, let me clear this off so that I can try to outline one or two things, a few things for you. Okay. So number one, okay, how to address overtrading. How to tackle overtrading. Okay, how to tackle overtrading. So number one, revenge trading, actually, not overtrading, revenge trading. Revenge trading, okay? So revenge trading is a situation, for those who don't know what revenge trading is a situation where you enter a trade and the trade, you either miss the trade or you lose the trade and you get angry that you lost that trade and you jump into the market immediately again to try to recover the loss you just made. That's what overtrading is about, or revenge trading is about. It happens to you without you knowing you may not even be keeping track, but it's just happening to you because you're overwhelmed by emotion. You're overwhelmed by emotion, right? That's why you overtrade. That's why the revenge trading happens. Number one, what is your trading plan? What is your trading strategy? What exactly? Define your trading strategy. Define it very clearly. Define it very clearly. When you have defined your trading strategy very clearly, put it in your plan. Put it in a plan. Write it down clearly. What you are, define your trading strategy clearly. Write it down. Write it down, right? Write it down. So write it down. When you've written it down, number two, when you've written it down, then write a commitment. Write a commitment. See, this thing is completely a discipline thing. And the only way to address discipline and the only way to create force discipline is to make a plan and commit to the plan. That's all. There's no two ways. If you say to yourself, I'm going to start with, I always wake up 7 a.m. and I want to start waking up by 5 a.m. What you are going to do is you are going to write it down. We wake up by 5 a.m. Then you are going to put a mechanism in place to help you to wake up by 5 a.m. Yes. So that mechanism might be an alarm clock. And then you have to put that alarm clock somewhere where the alarm clock will disturb you enough to get up. Because if you say to yourself, I've been waking up 7 a.m., I want to start waking up 5. And then 5 o'clock, your sleep is still very sweet. Tomorrow, you're not going to wake up. So put an alarm somewhere where it will disturb the hell out of you that you will not be able to sleep. You'll be dreaming the alarm as it's disturbing you. You have to, what I'm saying is put a mechanism in place. So write down the plan, then make a commitment to the plan. Write a commitment. Write a statement of commitment. Write a statement of commitment beside your plan and tell yourself, this is what I'm going to do. If I make a losing trade, I am going to take a break from the market for 2 hours. If I enter a trade and the trade loses, I am going to give myself a 2-hour break. 2-hour break. That is, I will force myself to leave my chart for 2 hours. That's it. Write it down there. Just write it down there. See, this thing I'm telling you, when you write it down, you may think, oh, is this what it takes? You will discover how difficult it is. If you are this person and you have been doing reverse trading, when you make a losing trade, you will discover how difficult it is for you to leave your chart and not trade for 2 hours or 3 hours. Then another thing is tell yourself, if I lose 2 trades in a row, or if I lose 2 trades, if I lose 2 or 3 trades in a row, 3 trades in a row, I quit for the day. I quit for the day. And by the way, I will encourage you to make this only 2 trades. Make it 2 trades. If you lose 2 trades in a row, 2 trades in a row, quit for the day. This is a commitment. This is not a suggestion. This is something that you are determined to do. It's like when they tell you resume in the office by 8 a.m. You don't come and start making excuses. Now they can take your excuses 1 or 2 times, but they will not leave. They will not continue to take your excuses. You have to look at your own commitment like that. Look at your own commitment like a very solid commitment that you are going to get punished for. That's the way to do discipline, because you can easily let yourself off the hook. You can easily let yourself off the hook, and you don't want to let yourself off the hook, right? So this thing you have done, this small thing you do here now, number 1, write a clear trading strategy. What exactly are you trading? We write it down. Number 2, write a commitment to yourself and tell yourself, this is what I'm going to trade, and this is exactly what I'm going to do. Then continue to, I'm not even concerned whether your strategy is working very well or not here, because that's not even the problem that you have here. The problem is not the effectiveness of your strategy. The problem is you have a situation of indiscipline, and you need to take care of that first, right? So whether your strategy is good or not, that's not even the point I'm focusing on here. So the next thing you want to do is write down your strategy. Number 2, tell yourself, make a commitment, write a statement. Every time, if I make a losing trade, I leave the market for 2 or 3 hours. Even if that means that you are going to leave for the rest of the day, it's fine. I leave the market for 2 or 3 hours. You are not looking at the chart. You quit the chart totally for 2 hours or 3 hours. Then number three, if you lose 2 trades in a row, shut down the chart no matter what. You will discover that this thing is very difficult to do. Very, very difficult to do. You will discover that this is very difficult to do. Okay?